So some of you may be thinking of starting a social enterprise. And if you're thinking of starting one, should it be a company, a charity, and how should it be structured? Possibly you have a social enterprise and you're considering that a charity might be a better option, or even you're considering running a separate charity in parallel with what you're doing now. Why are you thinking of doing this? Is there a need? First of all, some definitions. There's actually no legal definition except that of registered charity or incorporated society. And the terms non-profit, not-for-profit, charity, the terms are often interchangeable. There is no legal definition except that of registered charity and incorporated society. We're going to look at some of these in turn, and I'm going to use the term charity as the generic term. So there are some specific types of charity. Social enterprise, this is where we come in, may have a public good purpose, but it's probably not a charity per se. Charitable trust, which may or may not be incorporated, registered New Zealand charity, incorporated society, and a company formed for charitable purposes. First of all, an incorporated society. An incorporated society is really a membership body, something like a sports club or a social club. It's formed and legislated under the Incorporated Societies Act 1908, which is currently being revised, and the revised act should be incorporated into law by the end of the year or early next year. It's registered by the Registrar of Incorporated Societies, which is part of the Companies Office, and there's the website there. And a charitable company, it's an ordinary limited liability company that's been registered as a charity on the charities register, must have charitable purpose, and the Constitution must constrain the distribution of dividends to the charitable purposes. So let's look at charitable trusts. Charitable trusts are established by individuals who are trustees of an incorporated society. A charitable trust is governed by its trustee and must have a public good purpose, but it can be quite broad. And you may or may not decide to incorporate or register a charitable trust with the Companies Office. So on the flow diagram there, trustees or society form for a public good, derive a trustee, decide to incorporate. If they don't incorporate, then the trustees become personally liable, but there is no legal reporting requirement. It has a certain legal status, but it's the trustees who carry the purposes. If you decide to incorporate, you go through the process at the Companies Office, which is actually very, very simple. And then the trust has its own identity. It is essentially, it has the rights and responsibilities of a legal person. Looking at registered charities, if the objects in the rules or constitution or whatever your founding document is meet the charity's purposes test, then a trust or an incorporated society or an incorporated body that has rules but otherwise registered, and many churches come under that banner, it can also be a registered charity. I mentioned that it had to meet the charities purposes test, and the charitable purposes are covered in section 5.1 of the Charities Act, and there they are there. The relief of poverty, the advancement of education, the advancement of religion, which I guess most social enterprises wouldn't come under, and then a general caveat of other purposes beneficial to the community, and that covers a very wide field. In producing your rules or your constitution, trustee to bear these in mind so that you can hopefully qualify to be a registered charity. Because registration actually brings certain benefits. You can get tax credits for donations, and you get an exemption from income tax, provided when you are applying, you tick the box that says you're going to accept donations or co-op. But registration also imposes responsibilities, which include an annual performance return. The annual performance return has to be in accordance with the rules of the external, the XRB, I forget what that stands for. But they have to be in terms of certain rules, they have to meet a certain format, which looks onerous when you first look at it, but actually once you've done it once, it's actually quite easy. If you are an incorporated charitable trust and have gone the next step to become a registered charity, then the registration requirements, the annual requirements of the Department of Internal Affairs trump incorporated the requirements of the Companies Office. But any rule change must first be cleared with and agreed with the Companies Office. There are advantages in becoming a registered charity, as well as being an incorporated charitable trust, because the incorporated charitable trust, as I mentioned, gives the trustees a measure, not 100%, but gives them a measure of legal protection in the same way as the directors of a private company, but doesn't give the charitable trust the seats that are eligible for tax credits, and doesn't give you exemption from income tax. Those come with being a registered New Zealand charity. In addition to meeting the charities test, your registered charities rules must contain certain provisions. No individual pecuniary benefit. There are some trusts that want to be able to make payments to their trustees, and the rules must clearly show that this is allowed. There has to be a clear statement about what happens if the trust is wound up, and how the surplus assets are to be treated. There needs to have procedures for amending the rules, and how the trust will be governed may also have membership functions, the powers of the trust, and so on. So providing those are covered, actually the rules of the trustee can be quite a question that I'm often asked when I'm assisting charities to register charities, charitable trusts, is do we have to have our accounts reviewed? I don't know whether Tom will be covering this, but the legal situation is stated there. It's according to the operating expenditure. If it's over 500,000, you have to review. If it's over $1 million in the previous 2 financial years, you have to have an audit. Otherwise, then it's entirely in accordance with what the rules of your organisation say, what the trustee says. And you may decide that it's a good idea to require that your accounts be audited annually. And indeed, if you're applying for funding, the funder may want to see a set audited or reviewed. Otherwise, it's in accordance with those criteria for operating expenditure there, or your trust do. Another problem that many organisations get into is the fine line between governance and management. And there's a definition there that management is about running the organisation, and governance is in making sure that it is run properly. So Governance may be a board, a committee, or trustees, and so on. And they deal with the what, the where, the why, the when. Management deals with the how, and staff and volunteers do the doing. That's relatively straightforward, but in small organisations, as I say, there is a very, very fine line, and often it's a bit like a Venn diagram where there's quite a big overlap between the two in a small organisation. But the governance is appointed in accordance with the rules of a trustee, and it does impose a certain responsibility or legal liability. Management is accountable to the board. Essential, really, that when you bring new committee members, new board members on board, that they are properly inducted into the organisation, that they are aware of their corporate responsibilities. They must have a very clear understanding of and acceptance of and desire to progress the aims and aspirations of the organisation. Once a board member joins the board, decisions come down to corporate responsibility. Once a decision is made, it is the decision of the board. Unless discretion has been given, they must abide by that. So the board might be called directors, management committee, directors, leadership team, trustees. Terms are almost synonymous. And as I say, they must be fully conversant with the organisation's rules, because they have a duty to act in accordance with the rules, with due care and diligence, in good faith, and they are there to serve the best interests of the organisation, not if they've been appointed by another group or to represent another group. When they are acting as a board member, they may present in discussions the point of view of that organisation, but they must act in the best interests of the organisation. And they're not there to use their position and information for personal gain. An essential part of being a board member is that they are there to act financially sensible, and they must ensure that they don't trade, don't operate while insolvent, i.e. with no means of funding something, and then must keep good records. Policies and procedures are essential in running a not-for-profit and to a large extent a company or any organisation, really. A policy is a set of principles that are to be followed in order to do something, and the procedure is the way that something is done. Policies and procedures you have will depend entirely upon the nature of the organisation, because they set out how the organisation is to be managed and how it's to be governed. Policies and procedures should be kept under review, because they can very quickly start. Management may propose changes. There are some policies and procedures listed there, and one organisation that I was involved with actually had a policy on how to maintain policies and procedures.